right, guys, VA loans. What do we know about them? Who could use them? How do you qualify? Lots of questions, guys.
Tons of questions.
Yes, well, welcome back. We are at the Monthly Mortgage Minute. Guys, we're here. We talk about different things that have to do with mortgages, different programs, ways to qualify, things going on in the market. So I have Chris with Fidelity Lending here every month, man. How we doing?
Good, man. How are you doing?
Good.
I'm excited because I don't know anything about VA loans, so I'm excited
Oh,
for you to
no.
tell me all about this.
No way, dude. That's what I'm here for, man.
I'm only kidding.
Yeah, so I've actually had some questions this last month of, who qualifies. I have family, I have a boyfriend, I have a father, I have an uncle. So let's kind of start with, who are VA loans for?
Okay, great question, because like you said, you had a couple questions. You picked up the phone, you called me when you were sitting there with the buyers. So one of the things that came up was, like he said, boyfriend-girlfriend situation. The boyfriend was a veteran, and the girlfriend wanted to go on the loan with him. Unfortunately, you can't do that on a VA loan.
Okay.
The way VA loans work is if you have a spouse, the spouse can go on.
So actually legally married.
Legally married, correct.
No
Can't
common
just-
law marriage.
No common law marriage.
Just checking, we're in Florida.
Do you know anybody that's common law married right now?
I mean, I don't know the
Listen,
actual
we'll skip over that.
definition.
We'll skip
I don't know
over
the
that.
actual definition.
We'll skip over that. So anyway, no, they have to be legally married.
Okay.
Or, like I had an instance a long time ago, husband and wife. Okay. They didn't qualify. Come to find out that the brother was moving in with them, and he was a veteran as well.
Okay.
So because the husband was a veteran and the brother was a veteran, all three could be on the loan.
Okay.
So husband, wife, and brother.
Look,
And Brody
it's
has
like
come
you.
in. Brody has come in to say hello
This
again.
is his cameo every
This is
time.
it. Every time he comes in.
That's awesome.
So Brody's here. Basically what he's doing is acknowledging that this is good stuff. Okay, so if somebody's in the National Guard, they qualify too if they have the right amount of hours. And that's something we can walk that person through. So just get with us. We'll kind of figure out if you have enough hours.
Is that similar to the reserves?
A little bit like the reserves, but the reserves are a little bit harder because the reserves, it's harder to get the time in. The National Guard, they get more time that they do it because they're serving for like hurricanes and things
Months
like
at a
that.
time
So exactly.
sometimes.
So they build up their hours.
They're like on call.
Exactly.
I got it.
But so VA loans are excellent. Okay, one of the things that I love about VA loans is, so VA changed their platform.
Okay.
And it used to be that VA followed the loan amount limits of a conforming loan.
Okay.
You're scratching your head saying, wait a minute, why wouldn't they follow FHA? It actually followed higher loan amounts. And then all of a sudden we had this really, really, really cool thing that happened. They removed the loan amounts.
So it's unlimited now?
Unlimited. So you can buy
VA?
$1 million VA home.
Really?
You can buy a
When
$2
did that
million.
happen?
It happened last year.
Wow.
So
that's good.
this is great news.
Nice.
And so one of the interesting things is that one of the higher expensive areas in the country is Washington, D.C. and Maryland and stuff right around there. So when you come to think about why that happened, you kind of scratch your head and go, oh, maybe the politicians want to help themselves out. But in a way, it really has helped out all veterans because the price of homes have gone up so much.
Yeah.
But it is kind of cool to think that you could do a $2 million VA loan.
What was the limit before?
It followed the conforming loan amount. So 417 was one, then it went to 459, and so it had been inching up, but it took a dramatic jump from in the fours to all of a sudden unlimited.
Wow, that's great.
So as far as like if we look at loans and we say FHA, VA, USDA, Fannie Mae, Freddie Mac, VA, the highest loan amount that you can do now is a VA loan.
Yeah, that's great.
So for all those other lenders that were running away from VA loans because they didn't want to do it because it was too much work and all this other stuff, and they were talking people out of it, now they're kind of scrambling saying, well, maybe it's not so bad.
Well, these people put their lives on the line for us, man. I think this is a great thing.
I totally agree.
Jesus.
I totally agree.
Yeah, man.
There's a couple other really cool things about VA loans. So VA loans have different requirements as far as who's going to qualify and what they have to make.
Okay.
So like in the past, we've done loans where the borrower's debt to income ratio has been in the 70s, and we get it approved VA. That would never happen on a conforming loan. That will never have. Now, the first thing you're saying to me is, dude, you setting people up to fail? No, we're not setting anybody up to fail. What we do is we look at this file and we'll say, hey, listen, it's a husband and wife. For whatever reason, the wife has bad credit and we can't use her income. based on that. But we know that there's other household income there. So when we're putting it together, we're sitting down and we're consulting with the client. We're saying, listen, with the both of your income, we all know that you can easily qualify for this. So we're going to try and go this route. And if we do get an approval, just know we're not setting you up for failure. We know you're going to succeed.
So who makes the call?
Basically what happens is we have to run every loan through one of the automated underwriting engines. So Fannie Mae owns DU, or desktop underwriting.
Yep.
Freddie Mac owns LP, or loan prospector. The government owns GUS, government underwriting system.
Okay.
The hardest one to get things through is GUS.
Yeah.
But the best thing was this. All investors will take DU, or Fannie Mae. Now this is where your lender makes a huge difference. If you're working with a broker, that broker is basically taking a loan package, putting it together, and they're sending it to an end investor. If that end investor runs it through their system and they say, hey, wait a minute, we have overlays, and an overlay is like, Fannie Mae is saying we'll do this, but we won't do this, we only go to here. You know, maybe they want a lower debt to income ratio, maybe they want reserves, maybe they want whatever. It's something that in the past, this bank has gotten their butt bit on something, so they don't want to get their butt bit again, so they kind of pull it back a little bit. Us, we are a direct seller servicer, and that second piece is huge. We are a seller servicer to Fannie Mae, which means I'm not going to another lender. I'm not going to an aggregator. An aggregator would be a big bank that goes and says, okay, ABC Mortgage Company, XYZ, PDQ, you guys all sell to me, and then I'll bulk sell to Fannie.
Yeah.
We do enough volume, we sell direct to Fannie. We don't need anybody to come together with us.
Okay.
So what happens is our engine is wide open. If Fannie says yes, we say yes. We don't have any overlays built in because we're selling right to them. Okay. What happens is when that file is complete, if there's an audit done, the audit is done to meet Fannie Mae standards. We're underwriting to Fannie Mae standards. We're not underwriting to an overlaid aggregators standards.
So you being a lender is the major difference.
Huge difference, and being the seller servicer. So we're going right to, because I could be a lender and not sell directly to Fannie. I could be a lender and not service. A seller servicer, you eliminate all of the mess. So that's huge. So we're able to get loans done that other lenders say no to. So if you've been said no to in the past and you're a veteran, you may want to pick up the phone and call us and say, hey, you know, you guys were just talking about this. This happened to me. Is there a way around that?
Okay. So the other question, and I've had lots of questions about this, if your family member is or was in the military, but they're not going to live in the house or anything, is there any type of benefit or anything like that?
Nope. The only way that you can have a benefit would be if your, like, say your spouse passes away. And your spouse was a veteran. Then you can get what we call surviving spouse benefits. But it can't be like a son or a daughter or a brother. It's not USA.
And is there a credit score limit?
So here's the cool thing. It is not technically credit score driven. But it has to go through the engine. So one of the things that we've said is, generally speaking, if you're 580 and higher, that works out. Now,
it should.
Surprisingly, so back in the heyday, when everybody was in 07 and 08 and mortgages were falling apart at rapid speed pace, you had conforming loans, you had FHA loans, you had VA loans, you had hedge fund deals, you had bank deals, you know, like you had all these 80-20s, things like that. Can you tell me, in the top three, who was the number one top performing loan that did not go into foreclosure? So you would think you have conforming loans, generally speaking, had 20% down. You had FHA loans, 3.5% down. You had VA with 0 down. Who do you think was the best performing loan?
Well, I mean, if it was character driven, I would say VA.
You're right.
Wow.
It was the best performing loan when the market was crashing. Because more veterans had the character to say, no, I signed up for this, I'm going to follow through with this. And so we had less VA foreclosures than any other product type.
That's a great stat there. I never thought of that, but it makes sense. You know, military does a lot for the mind, you know. Very cool.
So, you know, there's a lot of other benefits that we have when it comes to VA loans, One of the things that's kind of cool is a VA loan is a loan that can be transferred.
Okay.
Okay, so if you buy a home right now and you say, hey, I'm gonna buy a home right now, and I'm gonna turn around, I'm gonna say, hey, it's $400,000, and let's just say 2 years goes down the road and you say, hey, you know what, I got this itch and I really need to go to Seattle.
Yeah.
So you can turn around and call Al and say, hey Al, we did that VA loan, I want you to put it on the market. And then Al's gonna say, hey, good news, interest rates jumped up 3%. We're gonna put that you can take over this loan at 3% less. So now what happens is that home is now worth more money than the house next door. Because the house next door can't get that kind of loan at that interest rate.
So
you
it's
could sell it
fully
at a premium.
transferable to anyone, even if they're not in the military.
They would have to qualify.
Okay.
Okay, now.
Which is still great.
Right.
Wow.
So now a lot of veterans will say, yeah, but if I want to do another VA loan. Okay, VA has the ability for you to go into what's called extended entitlement.
Okay.
Okay, and basically the way extended entitlement works, it used to be like, oh, you cannot hit this because it was, you have to go over 144,600 loan amount. So you're thinking, oh, in the past when homes were selling for 180, 190, you're like, well, it might be a little tough, to whatever. But now you can't find anything for 200 or whatever. So everybody hits the extended entitlement.
Say I'm in the military, I have a loan, I put it on the market, I want to transfer it. In that transfer process, once the person is approved, does that take all of the liability off of me?
Close.
Once it's approved and it closes. So that takes the liability off of me. They have the loan, they have the rate, but they also assume the liability and everything. Now, so since I'm out of that,
your entitlement is fully restored.
And okay, great.
Yeah.
That's huge.
Yeah. Would you want something even huger?
What's that?
Okay.
Huger. Is that
huger.
A word?
We're going to go with it.
I like
We're going to say that it's huger because that's what we can do. Because see, we're hanging out in space here. We're on the wild web, so we can do wild things. That's where I
live.
So the cool thing is this. So like if we were to do a conforming loan and put 3% down,
okay,
the seller could pay 3% of our closing costs. Now you're going to say, hey, who's paying closing costs now, right? Well, the market has shifted.
Oh, it's happening.
The market has shifted, and we went from an area where not only are they not going to pay closing costs, but they're not even going to sell at what they're asking. They're going to sell for higher. So things have changed.
Yeah.
So you can pay 3%. Well, if you go FHA, it's 6%.
Okay.
Well, VA, they can pay them all.
Wow.
So VA gives a little bit more flexibility there. Now, we do have to get into customary fees, not customary fees, but for the most part in our area here, they can cover everything because it is customary that the seller pay the doc stamps on the deed, and it's customary that they pay the thing. Now, you shouldn't really exceed 6% anyway, so we should be fine there. But just a little caveat, just in case, a number comes in high, we're good to go there. So that's cool. Now, there's another huge benefit, and I don't know if I should wait until the very end, or you want me to let it out now?
Let it rip.
Okay. So, one of the biggest programs out there right now, as far as down payment assistance goes, okay, is the Homes for Heroes program.
Yes.
Okay? So they're talking about military. I mean, they're talking about people in the military. They're talking about doctors and stuff like that. Now, you just said something earlier that was great, and I kind of kept it in my mind. We should do this for the military, right?
Yeah.
You said that, right?
Yeah, man.
Okay.
They deserve it. Jeez.
Military are the only ones that are exempt 100% from being a first-time home buyer. They could sell a home today, buy another one tomorrow, and get 5% of the loan amount towards down payment or closing costs.
Through the Homes for Heroes.
Yep.
As many times as they want.
As many times as they want.
Oh, wow. Epic. I love that.
So, if we have somebody, and this is huge, if you're coming in from another state, okay, and let's just say, the markets have changed, because the markets are changing in other parts of the world, not so much here.
Yeah.
But like, if you go to like Michigan or some of those other areas or Cleveland, I'm talking to people coming from there, and they're like, the value of my home went like this, and guess what? It shot down again, and I missed it. So now I'm not really walking away with a lot of money, so I don't have a big down payment. Well, if you're a veteran, you don't need a down payment. You literally could walk in with the cost of your deposit. Done.
Wow.
So if you put $1,000 down, you walk into a house for $1,000.
Wow.
If they take a $500 deposit, you're walking in with $500.
Wow.
Sometimes we could even work on the numbers and see if we could even get that money restored back to you. So you're literally walking into a house with no money out of pocket.
Wow, I love it.
Yeah. So.
Yeah, guys. So VA loans, there's a lot to it, but everything I hear is awesome.
It's awesome. It is awesome.
One last question, and these are some of the things that come up often as well. The requirements on the home. You know,
Okay,
what
so
are the requirements
great
on the
question.
home?
Great
I just
question.
remembered that.
That's an
I've
awesome
run into
question.
it. Yeah.
So the way that the VA figures things is it used to be right on the appraisal. It used to say not the borrower. It used to say any qualified veteran. Okay. So the way the VA thinks is any veteran should be able to walk into that home. Meaning if they're disabled, if they're not disabled, whatever. So if you have cracked tiles on the floor,
Yes.
and it's a trip hazard, that's going to be a problem for VA.
Makes total sense.
Okay. If you have screens that are ripped and shredded, that's going to be a problem because they want a veteran to be able to open up the windows. So this is an interesting thing. If you're missing a refrigerator, it's okay. But if you're missing a dishwasher, it's a problem. And the reason why is that dishwasher has to be plumbed in, has to be plugged in, the whole 9 yards. And you can say, hey, well, Chris, they might need an ice maker. Well, they don't need an ice maker, but with the dishwasher, they want that installed.
Okay.
So just, it's a couple little twists there. But yes, you're right. They want to make sure that house is livable. So if there's chipped paint, they're going to want to check for lead-based paint and things like that. So there are some little twists with VA. But all in all, the thing that kind of makes me laugh is sometimes realtors are like, well, if we go with a conventional loan, anything goes. Okay, anything goes. Yes, you're right. We can get an appraisal that is as is. But do you think a lender wants to lend on a property that's dilapidated and falling apart? No.
Oh, yeah.
Okay, so we're going to get into quality of the appraisal and stuff. What I can say, in this area here, we really don't have a whole lot of homes left. Like, I'm not saying there's none, but we really don't have a whole lot of homes that you walk into and you're just like, whoa, holy cow. Because those homes were taken over by investors. They were fixed up. They were resold for a profit and stuff like that. So we're now in a situation where as homes are coming up, people are living in these homes. So they're not so trashed. Not to say that there aren't any trash, but the majority of the numbers that we're going to be looking at, the majority of homes are going to fit in a VA.
And the reason behind it makes total sense. Like they don't want to just go out finance and stuff and then somebody comes in a little older that's been through it and now they got to do all this work. Now they're not really doing them justice.
Exactly.
So that makes total sense.
Plus, if you're a veteran and you served, the best case scenario is you're in your late 20s, but more than likely you're going to be in your 30s and up. So these people are like a little bit more established, and they're not going to be looking for that home that has chipping paint and peeling paint and blown out windows and doors and holes in the floor.
It makes total sense.
Hopefully they've elevated themselves to a point where we can get them into something nicer. Again, it's the least we could do for them.
All right. So now let's get into what have you seen in the last 30 days since we last met?
Volume has picked up a lot.
Awesome. Okay.
So what I've seen is that the buyers are back out there. And that happens. So what happens is interest rates went up, then they came down a little bit. So now everybody's saying, hey, I got to jump in on this bandwagon now. We've had some new thought processes come out. And the new thought processes is just maybe, we're going to start to see rates kind of stay where they've been. They kind of came down a little bit. So what I'm advising people to do is, if you were waiting, get off the fence now, because coming up, I think we're going to see a little bit of inventory hit. We've got a little lower interest rates. Now could be the time that A, you get a good deal on a home, and B, you get a decent interest rate. Now, let's talk this one through a second, okay? We talked and we're saying, hey, sellers are now willing to pay closing costs. Okay? What people can do now is this. I have a lady, she's buying a home right now, okay? Got good credit scores. She wants to buy down the interest rate. We're talking about rates in the 5s, buying them down. So she's paying a fee to get that interest rate. But what she's saying, and she's right, she's going to take advantage of that situation. She's going to pay a little bit of money. She'll recoup her money within 2 years. Okay, she knows she's going to stay in it at least 5. So for 3 years, she's now going to be in a home that has interest rates in the 5s. That even if rates kick up a little bit and they go into the 7s or whatever like that, she's going to be 2 points better. And then she's going to say, hey, why do I want to move? I'm getting older. I want to retire here. This is good interest rate. Now I got 5 years under my belt. I only have 25 years left. Maybe she's made a couple double payments. Maybe she only owes about another 15 or 20 years. But these are all strategies that we can work with you on to say to you, hey, if you paid one extra payment a year, you could take a 30-year down to a 23.
Yeah.
You know, maybe make 2 or 3 extra payments. Now you're at a 15-year. You know, if you're 35 and you're buying a place right now, and we can get it paid off in 15 years at 50 years old, okay,
Free
you'd
and
have no
clear.
mortgage, free and clear.
Yeah.
Then you could say, hey, you know what, if I want to go to that condo on the beach,
Yeah.
the person that's going to rent here is going to pay my mortgage payment out there.
Yeah.
So you could literally be living for almost free.
Yeah. Oh yeah, man.
So
Yeah,
some good things. There's a lot of
so-
times that people don't realize how much your life can be changed by having real estate for a long period of time and either convert it into a rental or sell it or do whatever. But to get to the point where at some point in time you have no mortgage would be great.
That's retirement, man.
That is
That's
retirement.
$500,000, $800,000
Yes.
free and clear that you got sitting there.
Yeah.
Yeah.
So, and then
man.
we could, you know, a couple episodes ago, go back and look, you know, hit the rewind button. We did reverse mortgages. So somebody could say, hey, listen, you know what? I have this house. It's now worth $500,000. I only owe $1. You know, so it's $400,000 equity. Maybe they go find another $500,000 place, put $250,000 down, have no mortgage payment by doing a reverse mortgage. That's only possible by having a mortgage now. So you guys, if you don't have a house now, you don't have a mortgage now, you're not building in value that you could tap into, whether it's 5 years, 10 years, 15 years down the road. But this is life-changing stuff, man.
Yeah, and
like,
there's
for real. Like, we're not just saying that. This is really changing people's lives.
There are lots of other ways, you know, that people can make money, start a business. But you know what? Not everybody's got that mindset to be an entrepreneur. It's stressful. It takes a lot of strategy, a lot of training, a lot of risk, you know, a lot of, you know, propensity to want to take risks. A lot of people don't have that.
No.
This is a very safe way. You know, you take your time, you're paying money every month where you live anyways.
Correct.
You know, so this is something that anybody can do to set up for the future.
Exactly.
You know, like people like me, I love taking risks. I love going out there, trying new things, putting money on the line, but I don't recommend it. You know, I don't recommend it to a lot of people. I don't know how long I'm gonna live. But
I know they said a lot of times, one of the things that came out is a lot of times that people that have a lot of stress tend to like have hair falling out and things like that. So I know that didn't affect you.
Oh, guys. So, you know, once again, man, I thank you so much.
Thank you.
Always
It's always a
great, great info. And I don't know if you guys see Melissa Daly. Come on, peek around, peek around. She's always there. She's learning as well. There's Melissa, guys. Chris with Fidelity Lending, and Al Beltran here, eXp Realty and Treasure Coast Live. We will see you guys next month.